In this module, we will discuss the changes to the PWI forms occasioned by the changes to Section 240. Now, if you look at the module on what the changes to 240 were or are, most of these things were already required. Um, Basically, the biggest thing standard setters did was they copied Section 315 into Section 240. All of those things should already have been done and documented. So seeing we already should have been doing them, that should be no particular additional work, though it might be more documentation. There are two parts to the changes. Changes to the audit program generator, the journal entry audit program, there's one more question. And changes to the planning, completion, and practice resource form, there are now 49 questions, maybe 10 or 15 more than there used to be. Now, the standards are a little unclear on journal entries, were before, still are. If you read only section 24049, it says select year-end journal entries, and then you don't have to do anything with them, apparently. To figure that out, you have to read 48, where it says test the appropriateness of journal entries, and then 49 goes ask about them, obtain evidence of completeness, select some year-end ones, and consider the need to test throughout the year. It's not required, something you might consider, something you would probably normally decide not to do, unless you had a really good reason. So first thing we have to do is ask management if they know anything about phony journal entries. Seeing the risk is that management is making phony journal entries, how asking them about that helps or not constitutes a procedure, I don't know. But it's certainly documentation require, and we require, and it should be in the rep letter. So in the old checklist and in the new checklist, we will ask their representations are in the representation letter. The new thing they've added is check on completeness of journal entries. They give us no hints in the application material about what they mean or how we might do that. Presumably, all journal entries in the general ledger are in the general ledger. Um, I don't know how there could be, the journal entries could be incomplete because we forgot to post some. Anyway, a checklist step, we thought about it. Test some year-end entries. Now, the advantage we have in a smaller audit, and again, see my previous video, revenue of under $1 billion. In a small firm, we probably made or proposed, got to be careful. You never make journal entries. You never prepare journal entries. You only propose journal entries. So we have probably already proposed all the year-end entries. Client probably hasn't made any. Um, so we've already done that. We've got the client to approve them in the representation letter. So that's done, and we just need to note that we've done that. Then there's the question of considering, and the word is consider, it doesn't say you have to. Some people like to produce documentation of this, and they say, oh, let's document 10 entries selected from throughout the year, or 12 entries, one a month. It's only documentation. I would suggest we probably don't need to do that. We need a really good reason before we decide to do that. And then testing appropriateness is hard because what we're looking for is management making phony journal entries. So if we have a junior staff person select 12 journal entries, see they're all approved by management and say that's okay, that's really meaningless. That doesn't do any good. It's just preparing documentation. So it really needs a senior staff person to look at the journal entry and to determining appropriateness is going to be different for every journal entry. Um, so picking 12 or 20 journal entries from throughout the year and seeing they're approved by management still doesn't do any good, never did any good before, and probably was a waste of time in a smaller audit because we probably didn't need to do it. So that's not much different, only one additional step. We will document something. This largely is an exercise in documentation, particularly in a small audit where we have proposed the year-end journal entries. So to some extent, a smaller audit is nothing but an exercise in documentation. Very important, though, that we do it and document it. Therefore, there's an audit program. Fill it out, get rid of the big red X. Now, 49 questions on fraud. Gosh. Well, 45 of them we've already documented. Many of them are as required by 315. You already, that's what the section says, is as required by 315. You already should have done this, so documented that you did it again. So, we thought about something, and if there was a problem, we put it on the crux form as a risk and material misstatement. Same thing, fraud, error. So if you did that for fraud and error as a first step, when you come to do the fraud section, you've already done it. So many of those questions are, yep, did it, did it, did it, did it, did it. And they were either required before or copied over from 315. So we already should have someplace or other done that pursuant to 315. 3 of them are procedures if fraud is found. Odds of us finding fraud are probably never, so those will never come into play. 1 are procedures if there are inconsistent responses. Probably won't be, but good to document that we thought about whether or not responses were inconsistent and documented that. So while it's more paper, there's really no change. So in a smaller audit, under $1 billion, more paper, mostly documentation, shouldn't be that much of a big deal. Most of this is stuff we were already doing. In a larger audit, 200 billion or above, don't know how that will impact this. And big firms may choose to produce more documentation to defend themselves when fraud isn't found, because the fraud is now no more likely to be found than it was before, even though standard setters are claiming that this will make it more likely to be found. All it will make it, if you do the documentation right, is more likely that you've documented that you did what you should have done, even though you didn't find the fraud. So I regret this, that I've added all these documentation steps. It's defensive documentation, but this is required of us by standard setters, so that's what they want. We'll produce more documentation. Doing actual work, obtaining actual evidence, of course there can be no evidence that there is no fraud. So the only thing we can do is documentation. There are a few additional procedures, if any. Standards are still very, very clear that fraud and or fraudulent financial reporting will not be found. Now they say very, very, very unlikely to be found. I translate that to will not be found. But what we need to do is have in the file, have documentation that we tried really hard, even though we knew it wouldn't work. So thanks for listening.